The outlook for the UK property market over the next 12 months is set to be relatively benign. However, we do believe that there are elements of opportunities still within the market that we can exploit. We believe that actually the returns will be focused predominantly on the income element of the return, but that capital growth will be less, although that there will be assets that you can really look to buy and therefore achieve capital growth through asset management. So whilst we do believe that yes, it's going to be a more benign environment, we do still believe that there are opportunities out there. The opportunities that we believe that you should be focusing on are very much in the regional focused assets, where it has been less exposed to the Brexit impact, which predominantly is affecting central London offices. We are focusing on the regional office element of the market. And this is because the occupiers in the regions are pretty wedded to their locations. They are there for a reason and they need to stay there to continue their business. And we are seeing rental growth and commitment to our assets because of that. We believe that investment should be focused over the medium term into the regional sectors of the property market. Predominantly, we would suggest looking for income as the main return environment for your asset. So you've got to look for assets that are going to deliver strong and steady income going forward. Capital growth can definitely be achieved going forward, but it's only really going to be through active management. So really sweating your asset, making sure that you're on top of it, looking at angles, looking at where you can achieve extra capital through working it yourself, not relying on the momentum of the market. I believe that value going forward will be driven from a couple of factors. The first really in terms of lot size. We very much deal with the smaller end of the lot size market, 2 to 20 million, and we've proven that in that area of the market you genuinely receive higher yields, and therefore you're able to distribute higher returns to your investors. So for us, in a generic sense, lot size is really important for going forward into the market that we are in. I think the second area where we see returns being driven from is in making sure that you're buying the right asset in the right location. It's got to be a good quality asset. It's got to be let to a good covenant, and therefore you've got to be convinced that it's going to deliver you the sustainable income return going forward. We genuinely do believe that going forward is going to be an income-driven market, and that is where we believe you should deliver and look for your returns going forward. So the two areas for us are lot size, because we genuinely believe it will give a higher return to investors, but in that lot size sphere you've got to look at the quality of the asset as well.